Hello, traders. It is Wednesday, August 21st. The summer's clipping along. I took some time off. I am well rested, and it's time to get back on track and do some market analysis. Ari, how have you been doing?
I've been well. Trading has been, doing great. I think people will see with the picks, but otherwise, just enjoying the end of the summer here.
Yep, and 2 weeks ago, I'll get into my pick because that's how we like to start all of our videos and live events off. You can see how those trades have fared. And you can see I had a short on Dell. 2 weeks ago, the stock was down in here, and now the stock has bounced. So you could say, Pete, you suck. Well, if you go back and watch that live event, please do. Both Harry and I were expecting a market bounce after a 10% decline. And I had outlined exactly the type of price action that I'd be looking for in the market and from the stock in order to get short. I still like Dell short. That is going to be my pick of the day, but I'm going to show you a bunch of other really good shorts and how to find them, how to set alerts on them. You can see I've got an alert set right here below the 200-day moving average on Dell so that if the news Friday, and we'll get into that, is bearish, that this stock will break that 200-day moving average and that alert line, and then I'll know that it's time to short it. But you can see even during the bounce, it struggled to get above the 200-day moving average. It is still weak relative to the market. Red line below zero, can't get above any of the other major moving averages, barely above the 200-day. I like Dell as a short. Harry, what your pick I know from 2 weeks ago is PLTR, so I'm going to put that up. And you
Yeah,
were on
I
the
picked
long
that. I think
side.
it was around 27 when I picked that. So obviously, anyone who held that all through 2 weeks ago or last week, anytime, literally, it's almost impossible for you to have lost on that trade. PLTR was set up perfectly for that long, and it took off. It went up $5 since I picked it, which is pretty much a 15% increase in the stock price in 2 weeks. So you really can't get much more out of a long pick than a 15% increase in 2 weeks. And my pick last week, when you were out, I picked Apple. And when I picked Apple last week, you bring up that chart there, you'll
Yep.
see I had Apple picked on the 14th. It was at around 220. I had just 2 days ago bounced off the 50 SMA, but it has gone up in 1 week, $5. So you get a 2% pop in that stock as well since I picked it last week. So Apple and PLTR have been were my two picks.
Yep, very, very nice. And Apple has fairly low option implied volatilities. So a move of that magnitude is really nice. What you'll notice out of the right-hand side of the screen here is that we've got the SPY on a 5-minute basis. And you can see that today has been very choppy. So the volume is light, news is light. Everybody is waiting for the press conference on Friday. Harry, I'm going to have you start off with market analysis. You've had your head in the game for a couple of weeks. What do you see?
It's obviously the number everyone would be looking at here is the all-time high, right? So, the all-time high is at about 565, 16, about $7 off of it. So that's a ways to go. Although the way the market has been moving on certain days, $7 isn't as much as it used to be. But right now, we've obviously had a pretty significant recovery off the lows. It's one could look at it. It all depends on how you're gonna. This is one of those cases where you can look at the chart and say, okay, we're forming a bull flag here. You got a nice flagpole on SPY on Monday the 19th, and now you're kind of consolidating right there, ready to break out to the upside. And then, or you could look at it and say, well, this thing is really extended from its EMA, and you're probably going to get some retracement from here. what I'm looking at and seeing is, wow, there's no friggin' volume here. Like this is a buyer and seller boycott at the moment. And there's not going to be much volume until you get a reason for it. And that would be either Powell at Jackson Hole, and obviously the expectation there is that he's going to be dovish. The question soon becomes now not whether or not they're going to cut in September. They will, but whether or not it'll be a 25 or 50 basis point cut, and that's kind of what they're going to look at as language for. And then you have the NVIDIA earnings the week after on Wednesday, a week from now. So those are the two last remaining events of the summer before we hit September that the market is obviously waiting on. But with the run up that we had, you would expect to see a decent retracement here, and we didn't get it. We're getting kind of lackluster, low volume price action. That's not really doing much, but that's a good time to look and see at what stocks are performing and which ones aren't. All else is being equal, the market isn't moving. So if you have a stock that's really strong right now or one that is really weak right now, it is doing so independent of the price action of the market. So right now, if gun to head, I would say we would probably go or close enough to try to test that all-time high. But a lot is dependent on Friday's press conference. What do you think?
Yeah, I am on board with pretty much everything that you've mentioned. I'm going to talk a little bit about the magnitude of the decline and how I got bearish when I saw just how far we had fallen here. This is a 10% move. It happened with gusto, meaning that you had a lower high double top here. You start taking out the 50-day moving average very easily, and then you plunge below the 100-day moving average. So it happened a little bit too quickly. And if this were lots and lots of profit taking by longer term asset managers, you would not have seen a bounce of this magnitude. Now, mind you, it has come on light volume, as Harry just pointed out, and the decline came on very heavy volume. That has me leaning toward the bearish side. And if those asset managers were looking for opportunities, so when you get a gap down like this, they don't really have the opportunity to unload a lot of stock. And then you get another gap down. They are not going to panic sell. These are people who are in these positions for years. Okay. So they're going to be trying to reduce risk, but they're not going to panic. And when you start getting a bounce like this, they're going to have levels where they feel pretty comfortable that they want to start reducing risk. And that supply is going to keep a lid on the rally. And you can see that the market really hasn't hit that resistance level yet. And that is a sign that they may not be aggressively reducing risk right now. I was watching for that. I wanted to see that. I was waiting for a stall, excuse me, at the 50-day moving average here and a VWAP-Q, and then a gradual rollover. If that happened to coincide with Friday's Fed speak that we're getting from Powell, I would have been ready to short on the notion that the next leg lower tests the 200-day moving average. Didn't get it. Okay, so no harm, no foul. I know what I'm looking for. I do have a couple of starter short positions on for longer term swing trades. So right now, I'm with Harry. We're in kind of a wait and see mode. The magnitude of this decline, if I zoom out, it is a warning sign, though. You are not going to drop this far, this fast, if you have a lot of aggressive buyers. You're going to get small, tiny little dips like this. When the bid is aggressive and buyers are looking to accumulate, you don't ever get a chance to drop very far because they gobble everything up. When they just kind of stand back and let the market fall like this, that tells you that they're not very anxious. And that's why I'm watching the magnitude and the speed of this drop has me leaning towards poke, 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 try and get through. I'm not going to be an aggressive buyer. I'll be a very stubborn long on a swing basis if we make a new all-time high. I'm also, because of the move that we've seen, not going to be an aggressive short because this was stronger than what I wanted to see. And we could just be in a moment of uncertainty where the market's waiting to see, is the economy going to really soften? That's been expected for 2 years and it hasn't really materialized yet. Is the Fed going to cut rates? Are they going to project that this is the new path, that they may continue to cut rates the rest of the year? So until then, we can expect lots of volatility like this. And it means that we've got to keep our swing trades fairly small and that we need to really focus more on day trading. Friday's a big number, not a big number. It's a big event. And the market right now in a news vacuum is searching for anything that it can latch onto. And that Friday speech from Powell is likely to do it, which,
You
by the
brought up
way,
a concept when you said, a lot of these people are holding the stocks for many, many years. And there's a term that I think our listeners need to be familiar with that institutions use quite often. It's called crowded or overcrowded, right? And so let's say you have a stock and let's say there's 1 million shares that's available out there. 1 million shares, they open it up and to buy. And let's say 700,000 of those shares are purchased, bought, owned, and held, right? These are people who are holding it, whether it's institutions or a 401k or whatever it is, they're holding it. And they're not likely to sell their position. So now you have 30% out there that is available. So you would have to now get the people who haven't already bought in to come on board and get that 30%. So take something like NVIDIA, for example. NVIDIA is considered a crowded long, right? So there's a lot of ownership of that stock. So for NVIDIA to continue going up, let's say with earnings, you'd have to bring in either a whole new set of people to buy up those shares, or the people who have been holding for a long time would want to add and average up on their positions, right? So that's what you call when things are overcrowded. There are stocks that are very liquid. There are stocks that the shares just change hands constantly. And then you have other stocks like the Amazons of the world, the Apples of the world, where a large chunk of it is just basically locked down. It's being held, it's being locked down, it's not going to move. And so the remaining shares are the ones that are going to affect the price action on that stock, not the large ones. And then you hear about when, for example, Warren Buffett closed his Apple position. That was an example of those shares being locked down that all of a sudden freed up. So it did cause a temporary drop of the stock. But what happened was when those shares got freed up, everyone came in, swooped up, and grabbed them at the lower price. So you just, that term of overcrowded is something that institutions use and pay attention to, particularly when it comes to earnings and where the bar is on earnings. The more overcrowded a stock is, the higher the bar becomes to move that the stock price on earnings.
we were talking about overcrowded 2 weeks ago. You were mentioning the yen carry trade.
Yes,
It's an overcrowded trade.
talk about an overcrowded trade indeed. Yeah, that trade, and from what I hear, it's almost completely unwound at this point, meaning that everyone who was going to get out of that got out, and that the impact has been felt. Trans Avalon in the comments just said, could it be a case that the market just overreacted on the crop carry trade? I'm not so sure they overreacted. I mean, some might say they underreacted. It's always dangerous. The danger of being at an all-time high is SPY is an ETF, right? And so basically its price reflects the weighted evaluations of all the stocks in it. And if SPY at an all-time high, you have to justify that valuation. So when you have something like the yen carry trade that falls apart or other things, it's very easy to knock something off the pedestal. Particularly if there is, those valuations are getting kind of frothy and the earnings that we've been seeing aren't exactly blowing the doors off enough to justify an all-time high valuations. So yeah, you get something like carry, and that's where you get that huge drop there. But then you get a recovery, but a low volume recovery. So it becomes very tenuous.
Yeah, I'm going to show you another very overcrowded trade, and that is VXX, and that is short volatility. And so when you get everybody on one side, here you got this drift, drift, drift lower in VXX. Oh my gosh, there's just no volatility in the market at all. And then you get this liftoff from 40 to 90, just this huge explosion. You get big market moves and big sell-offs, and those guys who have been shorting volatility have to adjust their positions, and they've got to start taking the other side of that trade and unwinding it, and that's when you get these big explosive moves. I do want to go back because there was a very interesting trade about 2 years ago, and to use Harry's phrase, I think he was cocaine bearish at the time. And it was just before Jackson Hole. He was building a very large short position. And at that time, everybody was speculating that, oh, the Fed is going to be more dovish. They are certainly not going to keep hiking rates the way that they have been. And lo and behold, no, Powell came out and said, no, we're going to keep hiking rates. We still don't have inflation under control. Here's what the market did. It sold off hard. Well, then you fast forward and you look at last year. Last year, this is about where Jackson Hole came out right in here. Okay, so the market's looking for a rate cut. They're going to cut in September. There's an 80% chance built in to the fact that, yes, the Fed is going to be dovish. They are going to cut rates in September. Whoosh. No, we're not going to cut rates. Guess what's happening right now? The Fed is going to cut rates. There's an 80% chance that the Fed is going to cut rates in September. If Powell comes out with some kind of wimpy, neutral statement like, yeah, we're seeing a little softness in the economic cycle. We've got a lot of room. We're in the driver's seat right now, but we'll see. We're going to continue to evaluate the data and see how it comes in. If we get that kind of news on Friday, the market is going to send a signal, and that signal is going to come in the form of a market drop. And that's why I have loaded you up with the Dell position. That's going to be a good short, and we'll take a look at some other good shorts. Harry is going to show you some decent longs that he's looking at because I think he's got one or two of those. Be flexible. Don't take a lot of swing positions right now because there's not a lot of news to drive the market, and that news that comes out Friday will be huge. We got this drop after the jobs report, but then the notion that the Fed might be more willing to ease after the FOMC statement sparked this rally. So now we're going to see where they really stand because that FOMC statement and that press conference, they came out before the jobs report was released.
So one long that I really like, I'm short Starbucks, by the way, in the challenge account, which is doing fine. I'm still well on track to be completed by probably around mid-September. We'll have doubled the account in 6 months. Is Clorox. Now, Clorox today is taking a bit of a breather. There's just a sector rotation going on there. But I really love the chart. You have a lot of reasons to like this. You have a clear break of an upward trend line here that happened on Monday, and that upward trend line you can draw it back to the beginning, May 21st, right? You have after, let's see, since August 2nd, bouncing right around that 200 SMA. Then it finally is unable to break below it. It lifts off. So you have this break of compression. So there's your second big bullish indicator. You get a break of this, you get a break of compression, then you get the break of an upward trend line. Third, look at this gap here that starts on April 30th, right? So April 30th, you get this drop from 148.70 dropping all the way down to 136.65. That gap basically started at 142.18. All of a sudden, bam, fills that gap. So now you have a third strong bullish indicator. You have three very strong good indicators. You have generally average to above average volume on stock, except for today where it is low. You have a bull flag forming. So, I mean, in terms of a daily chart, there's a lot to like about the Clorox daily chart. Is it an exciting stock? No, there's absolutely nothing exciting about Clorox. But unless you want to mix it with some Windex and take a deep breath, then it gets real exciting. But beyond that, Clorox is, to me, right now, a pretty good, safe, long, and also offers some protection against the market drop because it is consumer defensive.
Yes, yes. I was going to mention that. You can also see that there is heavy volume during this last little rally, the last few days. So, how did it fill that gap? It filled it convincingly with two long green candles, both closing on their high on heavy volume. Excellent. So, yes, consumer defensive stock, rotation into some safer names, especially with a lot of market uncertainty coming up this Friday. There's a lot of uncertainty as far as the election, too. I mean, we had a month and a half ago, it was pretty much priced into the market that Trump's going to win. Now it's probably 50-50. So the polls have evened up, and the market doesn't like uncertainty. So, yeah, I like that CLX trade. I think that's going to be a good one. Um, Let's see. I was going to take a look at Starbucks because you mentioned that,
I am short
and that is a
currently.
short. And so here's what I did. You see this big gap up right here? I just clicked on the low, and now I've got a GTC alert line. Took me 2 seconds. I looked at it and went, yeah, I could see if this stock breaks through that support, it's easily going to test the 200-day moving average. And then if it tests that and it breaks through it with gusto, then I'd be adding to the position. So I just took 2 seconds to set an alert there, and it's going to start filling in some of that gap. And you can look at what the longer term trend of the stock has been down when the market has been up. And if the economy starts to soften, I suspect that people are not going to be buying their $7 cups of coffee every day.
And you mentioned something, by the way, and just to find out, and I see people doing this a lot on Twitter, and I see, general. Try and resist the urge of playing the game. If this person wins the election, these stocks will benefit. If this person wins, these stocks will benefit, right? Um, that is a difficult game to play. One, you're basically betting on an election result. That in itself is dangerous, right? And if it's a clear choice, a winner in terms of, oh, we know this person's going to run, then the market, trust me, the market has priced in that probability already. So then it becomes which candidate's better for what? Oh, Trump's better for Bitcoin, and Kamala Harris would be great for a stock like Amazon, or you got to be careful there. There are so many intricate details that you're depending on what is just generally assumed knowledge. Oh, this candidate's good for this, that candidate's good for that, right? You would think, oh, okay, if Trump wins, oil stocks are going to do well. Well, that turns out not to be true. It did. Oil stocks and oil companies have done much better in the last 4 years than they did in the previous 4 years, where other companies did much better in the previous 4 years than the last 4 years. So, your generally assumed knowledge is many times wrong. And when you're putting your money into that and saying, I'm betting on this election result, and I'm also betting that if that election result happens, this stock is going to prosper, you have two opportunities to be wrong there. So I wouldn't engage in that. Follow the price action. Follow you'll see a lot of volatility as we get closer to the election, obviously. But I remember, and I don't know if you remember, I got burned on this once, where there was the Senate in it was Georgia, and the control of the Senate depended on whether Democrats won or not that election. And it was a January, it was a special election. And the assumption, the widespread assumption is that if Warnock and whatever won the senator position in Georgia, that the market was going to scream higher. And lo and behold, and it looked like they were going to, so everyone started placing their future long bets down. And they won. Democrats took control of the Senate, and the market plummeted. It just boom. And everybody's prediction on that was wrong, right? The assumption that the market likes certainty rather than uncertainty. If they didn't win, it would be a split Senate, blah, blah, blah. It would be deadlock. Nothing would get done. One has the House, one has the Senate, blah, blah. Market didn't like it at all. And it dropped like a rock. I got burned on that, I remember. You just don't play that game.
Yeah, and there are, just like earnings, there are lots of opportunities to trade after the event. And all we have to do is watch price action, watch volume, see where the money's rotating into. And so if you see FSLR running higher on a Harris victory, be cognizant of why that stock is going up. We know that this could have very short-term money flowing into it that could quickly come right back out of it. So you're just in there. You're not looking for any kind of long-term trades based on that. Most of what we do is fairly short-term, inside of a month anyway, month or less trade duration.
Yes. And I have some people here asking about DJT stock. Treat it as a meme stock, the same way you would treat GME and AMC. And for me, that means stay away from it. Look, I have more money in my pocket than that company is fundamentally worth. That's not a political statement. It's just a fundamental fact. That company is not worth whatever its share price is, right? $25 a share. It's not worth $3 a share. Particularly now that the main draw of that company has moved over to a competitive social media platform and is actively posting there. So it is a meme stock. It is a meme stock driven by retail buying and selling, which means it is not going to abide by many technicals. It is going to be all over the place. And yes, eventually, at some point, the reckoning will come on that stock and it will drop to $3, $4 a share. Just like GME at some point when it was at $3, $4, everyone knew, yeah, it'll be at $20, $15, $20 a share at some point, because that's where the company lied. So treat meme stocks like meme stocks. And for me, if it goes in that category, I don't trade them. Dave Wise successfully traded a short on DJT a while ago, and he did really well with it. I just prefer not to trade meme stocks. They're not very predictable.
Yes, and you can't trade options on it because look at the option implied volatility right here. It's at 122. Wow.
Yeah.
Wow. And I'm sure the bid-ask spreads are a mile wide too. So very, very difficult to get in and out of the stock. If you're day trading the underlying shares, yeah, there you can definitely see some patterns. Might as well take a look at what it's doing today on a 5-minute basis. It's good. It's got some strength in here. It's got some decent volume in here. So you could day trade it, but by all means, you'd have to focus on having an excellent entry point on the long side, buying a dip in here, for instance, where you're pretty close to VWAP, because you don't want to chase a stock like this. And if you have a bad entry, you're going to convince yourself to hold it overnight. And this stock is in a severe downtrend. So you do not want to hold a stock like this overnight. You could lose a lot of money on it. So yeah, best to avoid. Yeah. I agree with that.
Yeah, imagine if MySpace had a stock right now. Would you be in it? No. So don't be in this. But like Pete said, if you can grab, like any momentum stock, I don't care if it's a meme stock or not, if you get a very clear trend during the day and you want to day trade it, that is a different story, but that abides by a different set of rules. And you have to be very careful with momentum stocks because they fuck with your mindset. And the way they fuck with your mindset is, let's say you go long an $8 stock, right? And that stock was $5 on open. So that stock just jumped up 60% in one day. So you get the 60% pop, right? A lot of CB halts, all these things, and the stock keeps halting, and you jump in at 750 because you think, all right, this thing's going. And all of a sudden, you go in at 750 and it drops down to 6. Now, though, but normally in that case, I'm getting out, right? Like it didn't work, I'm getting out. But in your mind, you're thinking, but this stock is a meme stock. This stock is a Momo stock. This thing could go to 9 in the next candle. I just saw it happen an hour ago. It popped $3 in a single candle. So I'm not going to close now. And what you wind up doing is averaging down. You add, because the stock showed you its ability to vacillate like that. And you have this mindset that's not normally what you would have for a stock that follows technicals. Here you're thinking, okay, but it can recover because that's what the stock is doing. But at some point, it's not going to recover and it's going to keep dropping. And you can lose a tremendous amount of money if you are not prepared to take the loss on those type of stocks.
Yes, I agree with everything you just stated. And yeah, sometimes those moves are very, very random. You've got some larger money moving in and out. You've got market makers on the other side who are also involved in it. So it's much more difficult to trade. I want to say one thing regarding the charts. You'll see that we have some sell signals and some buy signals. We're very close to a new version release. So these do work on all time frames, M5 to D1. And what I'd like you to pay attention to is the entry point, and the signals they're fantastic. Okay. Of course, I'm going to say that because I designed them. But think about the entry points that you would have and how you've got immediate breathing room on the trade. What that means is that if you are buying on a buy signal and you get that immediate breathing room, you can put your stop at your entry point and then manage your profits. If the stock backs off, you're not going to lose any money, but you've got lots of upside potential. And that's one of the methods that you would use to trade these signals. Also, think about how much longer you have to build confidence over time. And that only comes with experience using them. But think about how much more money you can make by staying with a trade signal instead of just jumping in and out at the first moment when you have profit in the trade. So it'll give
Take a
you
look
more staying power.
at MMM and take a look at trade signals on that. I think MMM might be my pick. Ash, you kind of called it out there in the chat too. But if you take a look at MMM, I think that might be my long pick of
Yep,
the week.
I like it. I had it queued up. That came up in green royal flush, and it is at the very top of the list here. So yeah, that compression breakout looks really attractive. Obviously,
Yeah,
wish it happened on higher volume, but
yeah,
we're not getting that in the overall market right now either.
yeah. I like.
And
I just like the break. The very long. When you have that huge. I mean, look at the size of that bull flag there, right? The longer, the bigger the flag, the nicer the breakout generally. And here you have this perfect flagpole, this very long compression, which is the flag. And now today you're getting that breakout above. It's on a buy signal. So there's a lot to like there.
so technical analysis, you get this big run up. You can see how the stock opened above this compression after earnings. And what did it do all day? It continued to climb higher. They just absolutely love the news. So now what happens? Okay, so this is where experience comes into play. I've been doing this a heck of a long time. When I look at this chart, I'm instantly in the back of my mind thinking, what did the market do? It got freaking hammered. I mean, hammered, down 10%. What did the stock do during that time? Held up beautifully. It even held half of this long green candle. Did not pull back. That tells you that even with the big market pullback, what were institutional buyers doing? I'll buy as much as I can get. They're working off that supply because yes, there is going to be some selling pressure on a big move up like this because there's some institutions who've been long the stock for a while and they're willing to take some of those shares off and they get a nice big move like this. So they will take some of that, some of those gains, take some of the position off, but there are others who have not had a position in it. And eventually they start wearing out that offer and the supply is almost gone. And then the stock stages its next leg higher. That's how this works. I like it. I think that's a really good pick.
Someone asked me to briefly talk about swap settings. I'm not going to do swap settings applies to Forex. Oh, all right. You said swap settings, Phil, and now you actually meant VWAP settings. That is very different than swap settings. Swap settings is an interest rate differential, and it usually deals when you're talking about currency trades and overnight currency trades. But you're talking about VWAP settings. I'm not sure what you mean by VWAP settings. VWAP is if you're talking about just VWAP, you're not talking about AVWAP or AVWAP. VWAP is just, going to be your volume weighted average that any broker, any charting at all is going to easily give you. VWAP forms about 15, 20 minutes into the day. You can start looking. I wouldn't look at it much earlier than that, but there's not really much on the settings. Now, a VWAP, for example, then the settings depend on where you're going to anchor the price action, but and what date you're going to use, usually an earnings date or something like that. But regular VWAP, it's going to that should be the same across all platforms.
I had a question. How do I filter out false trade signals from the system? Well, first of all, you make sure that the stock has a technical breakout. If I look at 3M right now, would you short 3M right here on that sell signal? I wouldn't. It's in a compression. Why would I do anything with that? I'm not going to do take that short signal. So I don't care what indicator you're using. If the stock's in a compression, you don't trade the signals. If the stock is in a wider range and still not moving anywhere, lots of moves higher and lower, long mixed overlapping candles, that's not really the type of stock that you're looking for. So with any trade signal, with any indicator, it is one piece of information. Okay, so if you're going to blindly come in and just trade signals, then you're going to have a tough go of it. You need to have something more to go on. So you've got to have a technical breakout. It could be a breakout of a major moving average, 50-day, 100-day, 200-day, breakout above a trend line, some type of price action, stacked green candles, something to tell you that this stock is moving higher. And then, yes, you would start looking at buy signals like this, where you've got a nice long green candle above all of the major moving averages. All righty, on heavy volume. Yeah, this could be a really nice buy signal. So that's how you filter these out. And we have ways to add those other variables to the trade signals. And that kind of provides me with a nice segue into custom search and some of the different variables that you can use. And a method that I use today to find some decent shorts, because guess what? If I look through all of my bearish searches right now, I'm not going to find many candidates in here because the market has had a gigantic rally in the course of the last 2 weeks. There aren't going to be many bearish stocks with a move like that. Well, what do I do then if I'm get a bad reaction to Fed speak on Friday? You set alerts, you run searches, and you look for stocks that could potentially set up as good shorts. And so you run a search like this, and I can save this search. And there are global ways for me to set alerts so that any of these stocks would pop up. And I'm going to go through a few of them, and I'm going to go through the criteria I used. Very easy, okay, very intuitive also. What would I be looking for? What would a stock that's weak right now display? Well, it would be weak relative to the market on a D1 basis. It would have a D1 bearish trade signal. I don't like trading cheap stocks, so it's got to be greater than $10. I would like to have very good option liquidity. 0 and above would be that. And I'd like the stock to be below all the major moving averages. So with the market near an all-time high, this stock is relatively weak, bearish trade signal below all the major moving averages. This is going to be a good list. So then I simply start knocking through this list, and I'm going to do that with maybe 10 stocks or so, and I'll show you the types of alerts that you would be setting up. So AAL, there's not a lot here. Gradual drift lower. It's not a big mover. It's a $10 stock, but here you would set an alert like this. And this I'm going to be describing this, but this in reality would take you maybe 10 minutes to do. 10 minutes. That's it. So click GTC. You would click that candle there. You click that. Look at that. There's my upward sloping trend line. If that's broken, it'll also take out AVWAP-E and the EMA8. Now I'm just going to click through these symbols. Airbnb, big drop here. Could not rally with the market. Absolutely weak relative to the market. Yes, set some alerts. Just go through, click, click, click. Yeah, if it takes that out, I'm interested. So that's what you would do. I'm going to show you this entire list. These are weak stocks. Yeah, crowd. Look at that huge sell-off post earnings. Okay, so it's been able to crawl higher when the market's forming these long green.
That wasn't earnings, by the way, Pete. That
candles.
was the whole big data breach thing that
Oh,
caused everybody shut down the internet
that's
for a
right.
while.
Exactly. Nice sell signal up here, by the way. Really nice buy signal down in here. But in any event, yeah, you would set an alert line right here. And if that's breached, then I'm going to have a really nice short when it happens. And you would go through this entire list knowing that it has that, it has that, it has that. This stock is weak. And if the market rolls over, these stocks are going to be pounded because they've been dragged higher by their hair during this market rally. So that's how we use custom search. That's how you use alerts. And then lo and behold, Friday, let's say we get that negative market reaction, alert, alert, alert. They all start popping up. Then you just start going in, seeing which one has the high volume and that consistent price action on M5 with stacked red candles. You got your short on. You can even take a bit of a longer term short if the market takes out that 50-day moving average. But until I see a clean, heavy, hardy break of that 50-day moving average on big freaking volume, I'm not that interested. Because we know there's volatility both ways.
Someone asked about CHTR. Yes, I mentioned it yesterday as a good potential short. I mean, this is one that wouldn't, this is not a lower right-hand corner stock. Obviously, it's above all the SMAs, and it's probably, I mentioned that as a potential short because I'm looking at a convergence of the 50 and the 200 SMAs. When I see that, and I see that cross, that depth coming, and I'm thinking you're probably going to get a test. You're probably going to get some sort of test of those SMAs on a weak stock right now. It's been weak since it hit its high. So, and you have a natural kind of stopping point of those SMAs. If it breaks that, then you have a incredible short. So, I would right now, if you were to short it, that would be a decent short to have. It's obviously weak today. The market is up. That stock is down. I like that stock. And on the other side of the equation, I like Roblox. Thank you, Spooky Castle, for pointing it out. I think Roblox is, I like the daily chart on that. And no, the first thing I do is look at daily chart. I'm not even looking at the 5-minute chart. I'm looking at the daily chart. The only thing on Roblox that I would caution about is if you draw a trend line from 5.7, you connect it to 7.15, connect it to 7.16, connect it again to 7.31, it is going to come in right at today's high. So it is at that resistance point. So what do? Of course, set an alert on that trend line. That trend line, just draw it straight from 5.7. So Roblox breaks that trend line. Boom, you get pinged. Now you know, okay, this is a pretty good short to a pretty good long to take. And then finally, someone's mentioning Citigroup is weak. I like this type of short as well because I like this rejection again off of double trust SMAs. You have the 100 and the 50 converging. It tried on Monday to break through that on this last bullish day. It couldn't do it. So now today it breaks down. It breaks down below the EMA 15, and it still has a ways to go before it gets all the way down to the 200 SMA, which is at 57. So that's the next line of support there. So I like Citigroup as a short as well, but don't forget financials will be very sensitive to the Jackson Hole press conference. I mean, everything will be, but certainly financials will be. So Charter, good short. Roblox, good long. Citigroup, good short, but cautious short, because if you're going to hold it through the Friday press conference, expect some extreme volatility there. And then finally, as I run through these, someone asked about snow before earnings. I can tell you that JPM is bearish on it, but some people there feel the stock has been beaten up so badly that every bad possible result is priced in, and so they're bullish on it. What that tells me is I'm nothing on it, and I will stay nothing on it and probably not play the damn thing. Sorry, Pete, back to you.
All right, I've got a lot of symbol requests. What do I think about mRNA? That actually did come up on a bearish search that I ran today. And yes, that is a bearish pattern. Week after earnings, can't get off the deck, can't get back to the major moving averages. It's going to probably be, yes, it is, right in there in the search. Etsy, I think that's also in there. So, I mean, if you look through this list and just think about this intuitively, market near an all-time high, stock below the 50, 100 day, 200 day. I don't need to know really anything more than that. It's probably going to be a good short. Of course, you go in and take a look at the dang chart and make sure that nothing wacky has happened in the course of the last week or two, that the stock's not taking off. But that's why you flip through the charts. You take a look at them, you set your alert lines. If they break back below that, you're going to have a nice short.
Well, I just went long MMM. I took the 127 calls that expire on 8/30. And I took those for $3.10, and I got 10 contracts on that. So that is my long for the week, MMM.
Costco short that I highlighted 2 weeks ago didn't work out. I don't recall showing that short until it was right about up in here, and I know that worked out because I know I made money on the trade. So I'm not sure how long you're hanging on to that, but I may have reiterated it as still something that I liked if the market pulled back. Well, if the market pulls back like this and the stock is starting to move higher, then obviously, no, this is not going to be a good short. And on that test of the 100-day moving average, it absolutely held that moving average very firmly. So please go back and check the date of that. If I'm wrong, I mean, I've been on vacation for a week. I haven't done this for 2 weeks, so don't really know which video it was in, but I do recall doing a short on Costco. I'm very confident it was back in here off of this long red candle. So it was back towards the early part of July.
Someone suggested EA for a long. I don't love EA. I mean, it's in a channel, clearly, right? I mean, you can just look at the daily chart and see that very clear channel there. It's a pretty wide channel. So, it's that thing is going from around 145 all the way up to 155, right? So you got a pretty big gap there. It'll probably bounce around between there. The ATR is not great. I mean, obviously, look, if you're already looking at this, what is it? It's bullish, right? This is a bullish chart, but and it's an upward trend on the channel. I just don't love it. I just don't think you're getting enough movement, which means if you're right, you're not getting enough of a return as opposed to if you're wrong. So there's that, and then someone else said ISRG. I like this one a lot better as a long, but you know, this is a low volume stock. This is a stock that has the average volume in the day of 1.5 million shares, and today it's only at around 275,000 shares. So low volume stocks like this are, you know, but particularly this one. But if you're going to go in this one, use a call debit spread. That's probably your best bet. And it kind of goes towards what someone else said about biotech, and it's not biotech really, but I mean, is it advisable to avoid swinging them? The only thing is, I mean, no, you can swing biotechs. Just know that biotechs, more than probably any other sector or industry, are going to ignore technicals at times. And so, you know, that's what you just have to be careful about. A lot of these stocks, you know, when you look at an Amazon, you can say, all right, Amazon's going to hit resistance. So this is going to happen here with a biotech, you know, and so particularly low float biotechs, those are particular dangerous.
Yes, like VKTX. That is, but I do like trading stocks like that. I've got to admit that if I see something like that intraday, and I was all over it yesterday, I was kind of keeping an eye on it because of the price action that I'd seen the previous day. If I see monster volume like this and this nice steady price action upward, I'm looking to see. I know there were trade signals on this, and I wonder if I'm not sure why they're not showing up right now, but I know they were long in here. If I see steady price action like this and heavy volume like that, yeah, I'm definitely going to day trade this. Yep. And then yesterday you get this pullback here, and you can see how it compresses off the low. It makes a higher low double bottom. Now it's starting to inch its way higher. I know there was a buy signal in here also. And so now you're getting through VWAP. Yeah, I would definitely be long in here. Plus yesterday we had the market had bottomed out. And so this morning, FOMO Joe came in and he saw this and he saw this and he just had to have it on the open. And we had folks not trading it, but posting that, hey, this looks pretty good in the chat room. And so put in a couple of nice big long candles early in the day, and then whoosh, the bottom fell out. Would I be trading this today? Maybe. So I'm going to create an alert. And I'd like to see when it is above VWAP on a 5-minute basis. And I'll save that. And now I'm going to get an alert. If it goes above VWAP and I see nice heavy volume, I know that there were some buyers yesterday and the day before. So yes, that would be of interest to me. But the initial point was biotech stocks and the way that they move. And this is a classic example.
Couple of questions here. MMM has a dividend date, ex-dividend on 8/26. Affect your thinking? No, it doesn't affect my thinking. I mean, I'm just going to watch the price action on it. And a lot of times it gets priced in, and sometime right after that date on the 26th, it'll drop. I will probably almost definitely be out of this trade before that date. Thoughts on Target? It had earnings, obviously very good earnings, but give earnings some room to breathe. Those are kind of really dangerous to trade. So, you know, if you want to be really conservative, you give a stock 10 days, as Pete likes to say, after earnings before you trade it, but certainly give it a day. I mean, the damn thing just announced. And thoughts on NVIDIA before earnings? Well, I have 75,000 shares of NVIDIA right now. So that tells you my thoughts. You'll see before earnings if I'm holding them or not. You know, that'll be informed by comprehensive reports from JPM and so on. I did cover half that position through a 125 covered call. And then a good question here. How often do you spend trialing new techniques? As your trading desk opened up more methods for to you as a beginner, I stick with relative strength, relative weakness, but cautious about your journey. I mean, Pete and I and Dave and everyone, we have, you'll find higher standards at OneOption in that chat room than literally any other place in the trading universe. I mean, I would challenge you to find another place with higher standards. We explore new methods all the time in the background. Pete is trying them, I'm trying them, and he's building up, he's trying different, certainly different indicators, building things in, different trading methods. And our standard is like when something like the time spread that we started doing on earnings. In the background, though, we have to build up hundreds of those trades over time and show a consistent, yes, it has a dark mode, Spooky Castle Option Stalker, and show a consistent return on that investment, on that type of trade, a certain level of profitability that's consistent. Not, oh, I tried it, it worked. I tried a couple of times, it worked. Through different conditions, through all of this. I mean, the standards that the rigor that we go through, and only then, when it happens, do we put it out there. Because if we want you to, if we're saying, hey, this is a type of method of trade, use this time spread on earnings because this is this, we want you to feel confident that that has been tested live, not back tested, but actually tested with our own money, used and shown to be profitable time and time again before we are able to go out there and say, this is a method you should use. We will never put forth a method out there that we ourselves haven't tested over and over and over again and are confident is consistently profitable in various conditions over time. No method's 100%, but that you can know from us that we are constantly trying methods. The reason why you don't see many new methods popping out of us is we try them and they don't work. There are not many methods that actually work, but when they do, you will get them.
Yeah, even the trade signals that I've been working on, I had reason to go back and check all the back and forth notes over the last 8 months with my programmer, and it's pretty mind-boggling, all the testing, the revisions, the refinement, just the constant tweaks. So, yeah, it's rigorously tested and tried. Yes, I'm always receptive and always looking for new methodologies. The automated trend lines that you see on the charts. Yes, I haven't stopped doing that for 30 years. And as a trader, I think that you're always looking for new methods, always testing them. That curiosity has to be there if you're going to be successful as a trader. And someone in the chat room posted a statistic that went back about 30 years the other day. Okay, when you see that, I'd mentioned, here's what you do with that information. So you go back and you look at what the context was. Can I duplicate that? Can I find scenarios where this might come up? Can I vary that in any way, shape, or form? Does it apply to other situations? So yes, but when it comes to us actually talking about trading and what we do, everything has been tested time and time again.
Yeah. And that's why we come down so hard on people who throw out things against the wall or something they saw on YouTube or whatever. And, you know, it's sort of like on Reddit, I get that a lot. And it's like, hey, prove to me, show me that it works, right? Walk me through it, show me that it works, prove to me that it works. And then we can talk about actually implementing it or using it. And in all these years, I think there may have been one time where someone that wasn't a trader like Dave or Pete or that have been doing this and are known to be professional and live. When I say professional, I mean we live off of the profits from trading, right? That is not a hobby. It's not a side gig. It is a job. It is our salary. It is what we do. If we do not make money trading, we do not pay the rent or the mortgage or whatever. So only one time someone who wasn't a professional trader by the definition popped in with a method a few years ago, and it turned out that it was a decent method. I forgot what it was, but it was, but more often, almost all by, without exception, one exception, it's been crap. So, and that's because most people out there are just trying to market to you something that sounds simple. something that sounds like it makes sense to work. Hey, when this crosses this and you get 3 bars in a row like this, that means buyers are here and this is the volume zone above. This is where you buy and this is where you get out, and done. And yeah, okay, good luck. If it was that simple, everyone would do it, and you'd have a lot more people quitting their jobs and becoming traders. You don't.
I had a question on TSM. Would this breach of the 50-day moving average be enough for me to want to short it? I believe is the question. No, I wouldn't short it because I don't have a market that's conducive to shorting right now. Would it be of interest to me if the market rolled over and the stock continued to fall? Yeah, okay, then I would say this is a decent little decline in here. The stock has formed a lower high double top. It is starting, it's still relatively strong, but it's starting to weaken relative to the market. So the easiest thing for me to do is just click GTC, click on the bottom arrow here. If it continues to fall and I get that market move I'm looking for, it's going to come up on my searches and it's got a good chance of testing that 100-day moving average. Right here, right now, would I commit to trading it? No, I wouldn't. We get a breakout to a new all-time high in the market, stock's going to continue to push towards its all-time high. And the one thing about alerts is that it doesn't cost you a dime to set an alert. There's no margin tied up in it. There are no emotions in the trade because you don't have one on. The alert goes off, you take a look, see what the stock's doing, see what the market's doing, then you make a decision. So please use alerts.
One of the most underused but valuable tools in a trading's repertoire are alerts. The other thing that's probably the most underused is an actual trading journal that is properly entered and identified and labeled that traders can use to learn from. Those two things are, alerts are free. Trading journals generally cost money. People try to build their own, but the ones that they're offered, they're not that expensive and they're worth it. I like to use Trade Exchange. I think not Trade Exchange, Trader Sync, but there are others that are fine too. It's just what you're comfortable with. But there are simple things, very cost-effective things, or as you just said, Pete, free with alerts that traders can be doing that can help improve your odds. Give you that. You're trying to squeeze every last percentage point of advantage that you can to be ahead in this, consistently ahead in this, and things like that, setting alerts, having a trading journal, little things like that are essential to giving you those extra points of advantage. And so many people don't use them, but it's a shame that those are the basic things that you need to be doing.
Yes, and it's a pain in the ass, and it takes time. And I took it a step further, and it's really helped me, and that is to write extensive trade journals. Here's how the day went. Here's what I was thinking about this trade when it happened. Here are the emotions that I had to deal with. Then I would review them over the weekend, and I'd go through everything that happened the previous week. And then I'd try to set up the next week so that I don't repeat any of the things that happened. It's very helpful. When the trading day is actually happening, you've got everything fresh in your mind. Take a deep breath, go for a walk, sit down, take a half an hour to write down what happened during the day, and then take the time to review it over the weekend when you don't have anything else going on and really reflect on that. It's going to help you in the long run, but it's a pain in the ass. I'm busy. I got things to do. I want to go work out, whatever it is. And people don't do it. The successful people, they'll do it. So if you're struggling, make sure you spend time journaling, and the more detailed, the better.
Is Option Stalker a service that gives on entry and entry simple, or is it more of a screener service or community bounce? It's all of the above. I mean, there's a chat room where you have actually, I'm a member there and I run the chat room for Pete, but you have professional traders in there, not just me and Pete, but you have people like Dave. You have other people who are their orange traders who have proven over time to know what the hell they're talking about. trades in there are highly scrutinized and filtered, and the ones that you see and get, can abide by the system that we put forth that has been proven to be consistently profitable. Option Stalker as a system has everything from the buy and sell trade system, the buy and sell trade signals to the different various screeners with a concentration on relative strength that we use to dictate how we understand whether or not institutions are buying and selling. Do not confuse that with RSI, which is a complete bullshit crap indicator that can get fucked. So I'm talking about relative strength to the market. So it's a trading community, really. And I've been in, I won't say all of them, but a lot of them. And some of them are fine, a little overpriced, but fine. Most of them by far are scams. I don't have to tell you that, they just are. But the reason after going on a journey and going through all of them, stuck with Pete's is quite simply the rigor, the method, the rigor, all of it. So that's the answer to that. I think there's like a 2-week free trial there. Go check it out and look at, watch the chat room, see, give feedback.
Harry runs the chat room. I'm blessed to have him. I'm blessed to have Dave. They're professional traders. We've got lots of other professional traders who are in the room. They're there not because I pay them. I don't pay them. I don't pay them. I couldn't possibly pay a professional trader enough money to want to go in and post in a chat room, because they don't need to. They do what they do. They trade. They don't need anybody else. It's a community, and they really like the vibe that they get in there. They like the feedback that they get from other trading professionals. It's laser focused. It's not full of bullshit. That was by design. And so it's become a community where professional traders really like to hang out. And if we elevate you to becoming one of the proven traders, then you're not going to pay for the software. You got to prove yourself, and you got to post really good trades and be willing to help other people. And then I'll comp the software. I want people like that in my chat room. So that's kind of the spirit of what I'm doing, is I'm trying to educate people. I'm trying to teach you how to do this. And I very much want to hang out with other people who are willing to share their knowledge and do the same for others.
And it keeps us on our toes, Pete. I mean, look, we're human like anybody else. We see things that blast up high or low. We want to jump on. We get FOMO. We get all those things. We have to put, it's a constant self-control mechanism to go in, mindset adjustments to go in. And for me, certainly, it helps to be able to go tell someone, oh, you shouldn't make that, damn, that's a terrible trade, even while thinking, well, I was kind of tempted myself. But telling someone, what are you doing? You shouldn't be making that trade. That's not a good idea. Reinforces for me that it wasn't even a good idea that I was thinking about it. So it helps me be a better trader, certainly, by being there and talking about that. So, and yes, I do, rather than go off the rails in the chat room every now and then, particularly if someone is just fucking idiotic and posts things that are, way outside the realm. But it's always with, hey, I don't want you to lose money. It's as simple as that. I don't care about you. I'll say that. I don't dislike, well, I probably would dislike most people. I don't like people. I don't care. What I care about is I don't want you to lose money, because if you lose money, it means the people I don't like even more are making money. And I really can't stand those people. So what I care about, and what you can find comfort in, is that there's no personal, it's just, hey, that's going to lose you money. Don't do it. You're going to take your money that you probably worked your ass off for, and you're going to take that money and give it to someone who you'd probably want to punch in the damn face. So don't do it. And that's sort of where I'm coming from.
It gives me a lot of pleasure to see many traders come in. They're newbies, they're raw, they don't know what they're doing, and to watch them gradually along their journey become excellent traders. And we have a couple. This is one of the reasons that Harry is not blowing up as much recently is we have a core of really good traders that we've been building over the course of the last 2 or 3 years. And there are a couple in particular that used to constantly get yelled at by Harry, and they are good traders right now.
I find myself
Not
more
gonna
often
mention
saying, hey,
names,
great trade.
Yeah.
So not that it's a kind or gentler me, it's just that people are getting better, and that's what you kind of want to see. That's the thing. I mean, if you're not improving after being told, here, this is what you should do, this is what you should do, and you see people around you are making money, but you're not, and they're following the same rules you should be following, then the issue is your mindset, right? And then you got to identify that. But you really need to take stock, and you really need to be honest with yourself. Okay, I've been doing this for X number of months. I'm not making money. One, don't expect you for 2 years if you're starting out. Don't. You're not going to. It's going to take you that long to get to a place where you have the mindset, you have the rules, you have everything down, and hopefully you've been paper trading, you've been, not spending too much of your own money to get there. And then even when you do that and you get to the point where you passed all your things, you're ready to go, you still can't expect immediate returns. It takes a while. It seems simple. Buy it cheap, sell it better, more expensive. Easy. No.
I had a question on Netflix, and what do I think of it? I do like it here. I mean, this is nice. This is a breakout to a new all-time high. Ahead of major news right now, you could take starter positions. Ideally, off of this buy signal here, you would see that you've got a downward sloping trend line right here. You can just draw that visually. So we've breached that to the upside. We're above the 50-day moving average. That's good. We had decent volume coming into the stock on this breakout. It's been strong relative to the market. Pete, how do I filter out the false trade signals? I just showed you. 1, 2, 3, 4 different pieces of information that are consistent with a buy signal. So you take a long position here with the idea that the market has been pushing higher, and you add on strength. Now, right now, I wouldn't be adding until I see what the heck happens on Friday.
Yep. And the all-time
like
high on
Netflix.
that stock is, I think, 701, right?
Yeah, I like Netflix because I think the stock sets up very nicely. It pulled back a little bit with the market in here, and then it just shot higher. So yeah, it looked pretty good. What about the option wheel strategy and when to use it? Well, the wheel strategy, you're basically, they advocate, I think, in that strategy to do covered calls. It's a buy right because you're buying stock and selling calls. The alternative is to just sell naked puts out of the money, and then you wait for the stock to be assigned to you and you write calls against it. The whole strategy is great and fine if you really like the stock. Anytime that you are selling naked puts, you better make sure that you don't mind holding that stock longer term. So how do you do the strategy? That's first and foremost the most important thing. And what I would discourage is simply running volatility scans. This is what idiots do. I've seen it throughout my career. They will go and find the stock with the biggest option implied volatility, and then they'll have visions of grandeur that this $20 stock, if these options expire worthless, they're going to make a 30% return on it. And then they find out there's a clinical trial result that comes out and the stock is at $2. And they go, well, now what do I do?
Yeah.
The high option implied volatility is not there by mistake. It's there for a reason. So if you're going to use a wheel strategy, it's more of an investment strategy. It's an income generating strategy. You have to lean more on fundamental analysis to do that type of trade because you have to be willing to accept that stock and hold it longer term.
I mean, market makers are not idiots. They know what they're doing. If the more attractive options are for the wheel strategy, meaning the more premium you're going to get by selling the puts, and then more premium you'll get if it get assigned by selling the calls, the more volatile the stock is, right? The more volatile the stock is, the more chance you're going to get assigned that stock at a price that is well above where it should be. So, if you sell puts on something for 100 and you get, let's say, $3 for it, so you got a cost basis of 97, and the stock drops down to 93. Why? Because it's volatile. That's why you got the premium on it. And now you're short. Now you have to make up that $5 on the stock. So you start selling calls on it, right? But what if that volatility event now passed? So now your premium gets drained away, and the calls that you're selling are going to. It's going to take you months before you make up the $5 in the covered calls. It's just a mess. Just follow. I follow this very general rule. I like selling puts. I like collecting the premium puts. I never sell a put on a stock unless I'm comfortable owning it at the price. Period. 150 put, $3. I better be happy owning that stock at 147. If I am not happy getting assigned, I do not sell the put. Period. Done. That's it. Follow that rule. You'll be fine.
And I have a classic example of that because I am currently munching on some Alcoa. And I sold some puts in here when the stock was still fairly strong. I like the option implied volatility. I made a mistake. The option implied volatility was there for a reason. I sold options that were post earnings, and I was already expecting that I don't have this position anymore because it expired last Friday. And then lo and behold, oh no, you sold the wrong ones. So I fat fingered that and I decided, I'm just going to hang on to this stock because I don't mind owning Alcoa. I never minded owning Alcoa, but my intent was to sell options that expired here, and they expired here, and now all of a sudden the stock dropped. I decided, you know what? I'm willing to take the downside risk. I didn't know the stock was going to drop this far, but I certainly didn't worry about it. So I'm long stock at, I think, 38.50, 38.75, something like that is my net long. And when the stock gets back to 37.50 or so, I'll start selling some calls against it. But to Harry's point, you are going to be sitting on garbage and tying up your capital for a very long time, and you may not be able to sell calls against it. So that's the downside of the strategy.
Okay. I don't know. Someone said, so if you do happen to be one of those idiots, what to do with the stock once you're the proud owner of a stock that's worth less than the cost basis. And it can't sell calls because it's worth nothing. I don't know what stock you're talking about, but if you're talking about the thing's worth less than $1, I mean, sometimes that you just got to take your loss and move on. I mean, if there's no chance of recovery.
I hate to laugh, but it happens all the time. I mean, it is. I don't like people that teach the strategy and that don't teach fundamentals along with it, because that's really what it comes down to. And it's they make it sound so easy. Oh, you just do these volatility scans, and so what you should do with that is you should write this lesson down and you should learn from it. That's what you should do.
Indeed. All right. I think that covers it for me for the day.
All right. Let's recap our trades very quickly. You are long MMM. I think that was your long pick of the day, right?
You bet.
Okay. And I'm still looking at that Dell short. I like that. I'm going to put this screen up once more. These are stocks that I think will perform well if the market rolls over Friday. You can go through the video and take a close look at these, but you can also run scans if they're below all the major moving averages. They have relative weakness. If you're not an option stock or pro member, you won't have the trade signal, but good option liquidity, stock above $10. These are the types of picks that I'll be looking for, and I won't be doing anything more than going through that list, setting alerts. Take me 10, 15 minutes. Whatever happens on Friday, I'll be ready for it. So keep your swing trades on the light side until we know what that reaction to the Jackson Hole press conference is. Harry, thanks so much. We will see you next Wednesday. By the way, I am going to be doing, we're very close to releasing a new version, and I'm going to be highlighting the trade signals. I will be doing a live event where all I do is go through your symbols and your time frames, and we'll take a look at the trade signals together and we'll see how they fared. So I'll be doing that next week. I'm expecting to release the new version maybe this week even. And I don't want you to think that I'm cherry picking. I want you to see all the trade signals. They're excellent. And so watch for that in the live event section of my YouTube channel. And we'll see you next Wednesday. I'll do a video on Sunday as well. Thanks, everybody. Trade
Thanks,
well.
everyone.